What's going on, you guys? My name is Zach Hartley, and today is a very good day because Drone Delivery Canada just released their audited annual financial statements for 2020, and that means that I get to make a video and tell you exactly what I think about it. Here is everything you need to know. Let's go. Okay, so in this video, I'm going to give you full transparency into my position and when I got into the stock. Secondly, we're going to go through the financials. We're going to go through all the financial statements and compare them to the last quarter and the last year. Third, we're going to look at the management discussion and analysis. I'm going to tell you what stood out to me. I went through the entire document and I'm going to give you a quick summary. And then lastly, I'm going to give you my thoughts and my analysis on the entire 2020 as a whole for Drone Delivery Canada. Let's dive in. Okay, so first of all, I bought into this stock when it was 65 cents back on November 14th, 2020. I even made a video about it. If you want to see that video, definitely check it out. I also have made several videos on my channel about Drone Delivery Canada, including an interview with the CEO. So if you want to see that one, definitely check out my channel. But here is my purchase. As you can see, I am into the flight stock at 65 cents. I'm currently up 140% on it. I am also into the Drone Delivery Canada warrants. I got in at 27 cents. They're currently at 68 cents. I'm up 150% on it. Drone Delivery Canada makes up maybe like 13-14% of my portfolio right now. The portfolio is doing extremely well. I got a couple of losers right now. They don't make up too much of my portfolio, but overall, the portfolio is doing extremely well. We got a couple of big winners in there like MindMed, and Dragonfly is also doing well. So I'm doing well in the drone space in general. This is what the stock chart looked like when I bought into it. I was sharing this all over the internet, and I said, guys, we got a descending triangle right here. We've got a double bottom right around 60 cents. I was able to get in at 65 cents, and now the stock chart looks like this. It completely broke out. It set a brand new high at $2.55. We're now trailing off down to $1.50 right now, and it looks like sort of the same pattern, just over a shorter time period. You can see we've established a new high. The stock has basically trailed off for the last kind of two and a half months here, and now we are at a very key level right around $1.50 because the $1.50 acted as resistance back in January here, where we basically first tried to push higher. We got rejected at $1.50, came back down to like $1.10, and then pushed higher to $2.50. We're coming back down to that key level right now, so I'm super interested in the stock because if $1.50 holds and we see a bounce off $1.50, especially after what just came out tonight, I think it could be a very good week for Drone Delivery Canada. If $1.50 does not hold, then it may be time to lock in some profits and wait and buy back in lower. That's just my thoughts. But if you're interested and you're looking for a day trading brokerage, I personally use Questrade. It gives me great access to everything. I use it on a daily basis. And if you're looking for a brokerage, there's a link down below that will give you $50 in free commissions when you sign up with Questrade. Definitely check out that link if you're looking for a new brokerage. Now, let's dive into the financials of the company. So this is the meat and potatoes of what was released today. I have pulled out the financial statements for us to review, and this is what the balance sheet looks like. As you can see, the company has almost $23.5 million in cash, with total assets sitting at almost $30 million. When you compare that to their total liabilities of $2.27 million in liabilities, they have like a $27 million book value, over a 10x current ratio, and from all accounts, this is a very, very clean balance sheet. There's almost no debt on it. There's tons of assets. There's lots of liquid cash. There's very low liabilities, debt. There's no current financing. There's no loans. There's no notes payable. There's no major debt on this balance sheet, which is really, really nice to see for a fast growth technology company that is building and developing what could be the future of transportation. So, and when you compare this to the last balance sheet that came out on September 30th, there's a couple of differences. Number one, the cash position is now over $20 million. Before it was under $14 million. So a major improvement to the cash position. And when you look at the liabilities, they were at 2.3 before, and now they're at 2.2. So the liabilities have actually gone down while the cash position has gone up. So in terms of balance sheet, when you compare it now to where it was 3 months ago and even 6 months ago, the company is doing much better. So that's a great first sign. Now, when we dive into the income statement here, this is pretty exciting because this number here is actually higher than I was expecting. This is their annual revenue for 2020. So as you can see, the company as a whole brought in $265,000 worth of revenue. Now, obviously, that's not a very large number. It's not a big number in any way when you're talking about a company that's worth this type of amount. But what you need to look at is the growth rate. And we're going to look at that in 1 second, but I just want to point out their expenses first. They spent about $14 million in operating expenses in the year of 2020. They have almost $30 million in assets right now, about $24 million in cash at the moment. So let's call it a roughly 2-year runway before they start to really need to raise money again. So they're in a good position there based on run rate and how much cash they have in the bank compared to how much money they're spending. But now let's dive into that revenue growth, because 265,000, not a huge number there, but when you compare it to the last 3 months prior to this basically year end, as well as the 9 months of 2020, the first 9 months of 2020, then these numbers start to get impressive. So what I've done here is I've pulled the last quarter that was data for September 30th of 2020. So basically Q3 2020. And in that quarter, they brought in $36,000 worth of revenue. And in the 9 months ended September 30th, they brought in a total of $62,000 worth of revenue. And so when you break this down and you look at the revenue growth just over 2020, that's where it starts to get really impressive. And this is where it's sort of hard to tell from just a first glance at the income statement. And so Q1 of 2020, they brought in $2,500. Q2 of 2020, they brought in $24,000, so about a tenfold increase. Q3, they brought in $36,000, so about a 50% increase. And then in Q4, they brought in $203,000, which is about a 6 times increase. So absolutely amazing revenue growth just over the last 12 months. If they could continue just anywhere close to this growth rate in 1 or 2 or 3 years, this company is going to be putting up massive, massive numbers. And the best part about this company and why I like the business model and why this is my favorite drone company is because this revenue is reoccurring. Most of the contracts that they are signing is on a continuous basis. Usually it's 2 or 3 years where they are bringing in revenue every single month. And more than likely, this is the beginning of the drone era, and these customers are probably going to be lifelong customers for the next 20 or 25 years. And so as they sign on new customers, those are more than likely going to be very long-term contracts or very long-term customers, which means this revenue is reoccurring and it should be there each and every single month. And therefore, hopefully, we do not see a revenue decrease. So a year-over-year decrease in revenue probably is unlikely to happen unless people start to shift away from drones. And I don't think that is coming. I don't think that is the case at all. I think we are going dead on straight ahead towards using drones. And that is why the business model here is absolutely fantastic. And that's why I think this is the best business model in the industry as long as they can scale it up. And so far over the last 12 months, these are the numbers that I am very, very happy to see. So I'm super ecstatic with this. If we can see this growth rate continue at anything similar to this, I think that'll be phenomenal. Now, the last financial statement that we need to look at is the cash flow statement. There's a couple of big numbers on here that pop out to me, so let me just tell you about them. Number one is that they raised $21 million through private placements. So this is them going out into the market and raising money. And they did this basically in 2 different chunks. And I think why they did this is because Michael Zara saw an opportunity in the market. They saw the drone industry was super, super hot. There were a lot of people that probably wanted to give them money, and the stock was appreciating at a very rapid rate. So the fact that they raised money when they did does not surprise me. I think it's a smart thing to do. When your stock climbs that high, that fast, that's when you should raise money, because that's when you're going to get the best value for your company, and that's when you're going to get the most money for the smallest piece of equity, and you can keep growing and keep building. So it does not surprise me that they raised money the way they did and when they did, and it also doesn't surprise me that they do it in a way of warrants and options, because I think it motivates the employees inside, and it also gives investors that are writing big checks a whole lot of motivation to see the company successful. So I like the way that they're going about things. I think they were very smart in when they raised the money. And then lastly, $2.7 million in stock-based compensation. That's a little high, but honestly, you have to get the smartest people in the world on your team when you're trying to develop a new technology that's starting a new industry, especially one as large as this. So the employee expenses in this company seem a little bit high, especially when you compare it to other industries. However, I don't mind it because this is such a technology heavy and technology focused company and industry. I think you got to hire the best people in the industry and the best people in the world, and it costs a lot of money to do that, to be totally honest. Now, if you're interested in seeing more of my technical analysis, how I look at a chart, and my due diligence, then definitely consider signing up for my Discord chat. That is where I post all of my technical analysis, a couple of my trades, and I try to share as much of my due diligence as possible. If you're interested in that, it is $5 per month, and it's basically a group chat where I try to encourage everybody else to also share their trades, their research, their due diligence, and as much knowledge as they can to help everybody make some money. So if you're interested in joining a community like that, definitely consider checking out the links down below. They're in the description to this video. Now, management discussion and analysis. This is kind of the second part when a company releases financial statements. This is sort of management saying, hey, here's how the quarter went and here are our comments on this last quarter and on the financial statements. And so I'm just going to kind of cherry pick the parts that I think stood out to me and share them with you. Number one was the Condor. They did directly mention and address the Condor and testing and when it'll be available. So this is a quote that I pulled from management discussion and analysis because I think it does a good job of giving us a very clear update on where we're at. Now, I'm just going to read it out. Based on the successfully completed testing to date, the company believes it will soon be in a position to deploy the Condor in certain commercial customer pilot applications. In addition, testing of the Condor is expected to continue during fiscal 2021 in order to further enhance commercial applications and use cases. So this is really important because they're still testing the Condor. They're hoping to run a couple of pilot tests in specific applications. They expect the testing to continue through 2021, and they did not give us a deadline for when that testing will finish or complete. So a couple of things here. Number one is lots going on with the Condor. At least they're pushing it forward, but they have not given us a deadline. So we unfortunately do not know when the Condor will be rolling out for that first test, but I'm expecting to see a promotional video about it, and I'm pretty excited for it. But at least this kind of clears up where we're at on the Condor. Next thing I want to talk about is the expected expenditures. When I reviewed this in the last quarter, I made a video about it, and some of these numbers were way off in terms of how much they had actually spent and what their budget was. The numbers just didn't line up, and they weren't the appropriate ratios. Now, when we look at this today, it's definitely much better than it was last quarter. So they planned to budget $500,000 for scaling and management. They only spent $300,000. Not a big deal there, especially with everything that happened this year. Now, product development and commercialization, they budgeted $875,000 and they actually spent $1 million. Kind of offsets the money that they saved in scaling the team there. So pretty much normal and on par there for me. Now, next one here was commercial testing. They budgeted for $1 million and they only spent $573,000. They only spent about 57% of the budget there. That means, and it tells me, they may be slightly behind on the testing and the approvals and the process that it takes to get these drones into market, especially since they didn't give us a deadline on when the Condor will be approved. I was expecting it would be ready right now and kind of operational in the next few months here. I don't think that's going to be the case. However, I think that's just kind of part of the game. When you're in a new industry like this, you're developing new technologies, and it's a helicopter with no pilot in it that you've just never seen before. So this is understandable. It's a little disappointing. I would have loved to see this be $1 million and like 3 different tests operating right now. I don't think that's the case. Probably more so because of regulations rather than anything that management's doing, but that's okay. International and domestic marketing, 104 compared to 75. That seems okay to me, totally normal. And then international market penetration, 94 and 150. These numbers kind of feel like the sort of the same thing here. So pretty much in par and online here. About 225 budgeted and about 200 spent. So realistically pretty much in line. So when it comes to their budgeted versus actual expenses, it's much closer than it was at Q3 when I reviewed this last time. However, the commercial testing is still a little bit further behind where I would like to see it as an investor. Now, a couple of other notes with regards to the management discussion and analysis. They are working on a US expansion. They're currently going through the application process, and they are approved for very specific routes using visual sight. So the drone cannot leave or go beyond visual line of sight. So they are actively working on getting into the US. They've also added a lot of smart people to the management team. They've got a lot of people that have recently joined the team, and they outlined all of those people and they're basically resumes on the management discussion and analysis. So if you want to learn about them, definitely go in there and check it out. Next one is revenue is recognized over the term of the contract and only once operations have begun. So if we see a big announcement about, let's say, a deal with Shopify, well, it probably won't be reflected on the next quarter. It might not be reflected on 2 quarters because it's not going to be reflected on the financials until the operations are actually approved, tested, and the contract gets operational. So you need to keep that in mind when you're looking at the financial statements, because there's always going to be a delay, and there's never going to be like $1 million deal that goes directly to the income statement. It's always going to happen over time, but that's actually a better business model. Next one is lower research and development expenses. When I spoke with Michael Zara, the CEO, back in 2020, he mentioned that they're spending less on research and development and more on a little bit commercialization, marketing, and getting the products out there and getting them field ready. So that was really nice to see, and that it was actually reflected in the financials now a couple months later. So that's excellent. Increased advertising and promotional expenses. We can see that with the recent announcements of them landing a couple new deals at the beginning of 2020, which is absolutely phenomenal. It also looks like the deal with Air Canada is working out extremely well. I read through the terms of that deal. It's actually a 10-year contract. So the fact that Air Canada wanted to sign a 10-year contract back over a year ago with Drone Delivery Canada is a very good sign, and it's a really nice partnership that I actually didn't know enough about until I really read through it. So I'm really, really happy with that. I also like that. Most of the expenses decreased year over year. The only expense that really increased year over year was the advertising and promotional. So that's nice to see. Michael's got a nice control on the expenses. However, the company did issue a lot of options and warrants this year. So you may want to expect a little bit of dilution coming up. If people exercise all of those warrants, there is some dilution and some shares that need to be issued. However, that should keep a lot of the staff and management motivated, and it should be good for any of the shareholders if you own those warrants like I do. Now, here are my final thoughts. Number one, I think this was an excellent quarter. I think it was a great year, and I think more than anything, that revenue growth quarter over quarter is what makes me really happy and makes me smile and makes me feel good about this investment and good about holding this stock. I think there were some great announcements so far this quarter. At the start of 2021, the company signed a couple of big announcements, and I think that was absolutely excellent. I think the company has a very healthy balance sheet as it sits right now. Lots of cash in the bank, lots of room to run, at least a 2-year timeline here, lots of room. And if this revenue continues to increase at this rate, they may not even have to raise any more money, which is absolutely fantastic. Moving forward, I'm very excited to see more partnerships and a successful Condor project. I'm very excited to see that finally get approved, and I'm sure as soon as it does, we'll get a nice promotional video, and one of the partners that they have, or one of the customers that they've signed, will be able to ship some cool product with it. And I'm very excited for that day, because I think it's going to be a new breakthrough, and I think it's going to get a lot of media attention, which could also drive the stock up, which will be really nice. And lastly, I will be holding my position and possibly adding more. If it drops below $1.50, I'll have some concerns, but honestly, I'm in at 65 cents, so I don't think I'll be selling. I'll probably just let it drop out, and then I'll probably add a little bit more to it. I like the company, I like the management, I like what they're doing, and I thought it was a good year overall. Now, if you get any value out of this video, please consider hitting that like and subscribe button. And if you're interested in learning more about the stock market or checking out any of the resources and tools that I use on a daily basis to perform this analysis and make my trades, check out the links down below in the description. There's a ton of great resources. There's a course for how to trade the stock market. There's $50 in free commissions, $50 in legal advice, as well as my stock picking performance here on YouTube. So if you're interested in any of that, check out the links down below, and I will see you guys in the next video. Thank you so much for all of the support so far. Click that like and subscribe button, and we'll see you in the next one. Talk to you soon.